on, Dreammakers? Welcome to Today in Mortgage, where we try to make sense of the news in mortgage and real estate in today's crazy market environment. Each episode, we are taking the clickbait headlines in the news, breaking down what's real, what's hype, and what you actually need to be paying attention to and talking to your clients about. This is the news that your clients are reading, and you need to get ahead of it. I'm your moderator, and today you can call me Gigantic Gift Card Glut. And today I have Rich Jefferson on the call. Hey, Rich, do you have any unused gift cards burning a hole in your pocket?
Negative, sir.
You don't have any? We have so many extra gift cards, and we're not the only one. Well, as I was clicking through today's article, I also stumbled upon an article that said Americans have $21 billion in unused gift cards. So
that's incredible.
Gift cards out there that could probably save you some money this month because, things are tight right now.
For sure.
But we're not talking about gift cards today. Like I said, I was in CNN Business clicking around, and the headline that caught my eye was that the Biden admin cuts some mortgage fees amid housing affordability crisis. And so these are mortgage fees that have been out there, and there's a lot of stuff going on with the administration right now, and they're trying to address home affordability. So we're going to look at those fees and how it affects your clients and how it affects what you should be talking to them about. So, Rich, the piece of this headline that sticks out is the affordability crisis. Are we in an affordability crisis right now?
We are.
Yeah.
We're, this is what happens when you get to witness supply and demand. You've got a limited supply and a high demand. So what we're having to do now is get creative with loan products. And this is what the administration is trying to do.
Yeah. So we're talking about fees here. Talk a little bit about what these fees are.
So an FHA loan is generally targeted a product for low to moderate income folks, first-time home buyers, and it's a great product for those type of people, but it gets to be a little bit expensive because we're talking about mortgage insurance premiums. And should there be some unfortunate circumstance for the borrower where it were to go into foreclosure, the lender would get hurt badly. And to prevent that, HUD has mortgage insurance premiums on FHA loans. And, you have two versions of it. Otherwise, it would be very expensive per month. You have upfront mortgage insurance premium, which is 1.75%. And then you have a monthly mortgage insurance premium, which that is what they just lowered, which is huge. It could save your typical first-time home buyer with a property value of $300,000 to $350,000, about $800 to $1,000 per year, just in payment alone on mortgage insurance.
That's a good point. The quote that I pulled out of this article was, in areas where home prices have shot up, savings will be greater. For example, a home purchased in an area like Phoenix with a $400,000 mortgage, and obviously that could be translated to anywhere with a $400,000 mortgage, will save a buyer $1,200 per year. And a home at $500,000, that is going to result in $1,500 of savings per year. And that's according to the numbers the administration gave us. But that's a big deal for people who are on a tight budget. I mean, that's, a year ago, that would have been a full month's mortgage payment, right? Saved for over the course of the year, right? And so that $1,500 on a house that's $500,000, which, seems like an expensive house, but in today's climate is actually could be a starter home in a lot of these areas. So that's a big deal. And it's something that you should be talking to your borrowers, your buyers about, people who've been on the fence about affordability. Reach out to them and say, hey, this is going into effect. It's going to save you money. Rich, when does this go into effect, and when can people start to expect to see this?
On FHA loans closing March 20th and after.
Okay. Rich, if I have mortgage insurance on my current mortgage right now, am I going to get relief?
Negative. No,
Bummer.
That was a written contract already. This is helping our future buyers. FHA has always been that go-to for a first-time home buyer. It's an incredible product for a first-time home buyer. But when your prices of homes get so high, the affordability piece goes out the window for a first-time home buyer. The FHA's recent announcement really opens the window more, gives them more buying power by freeing up more payment.
Definitely. So, Rich, if you were out there, you were a loan officer right now or a real estate agent, how would you be talking to the people that you're selling to about this?
I would show them an example of a typical purchase price before March 20th and after March 20th and how that saves the borrower money. I mean, and then you can take that and, calculate that savings and how much more buying power that gives your first time home buyer. So maybe the 400,000, like here in Phoenix, the median sales price of 400,000, they couldn't afford it. But now that makes it feel like a $390,000 purchase because your payment savings came down. What they're doing is basically saying, we need to help low to moderate income. We're overcapitalized in our mortgage insurance reserves. So we're going to lower it for a time unknown. Don't know. A next administration can change that. So, because this is an administration call. So the next administration can change that. It's happened before. It happened in a previous administration. So, get it while it's there.
Well, good stuff, Rich. Before we give our final thoughts on this, I just wanted to ask a question to everyone out there. The market has changed. So how have you changed to take on the market? You need to be marketing yourself now more than ever, but where do you start? We put together here at Today in Mortgage a cheat sheet for you just for this 5 marketing musts to help you get ahead while things are down. To get your free copy, go to todayinmortgages.com/marketing. That's todayinmortgages.com/marketing. Don't waste this time complaining about rates. Go get that free resource. Pivot your marketing strategy in 2023 and start winning. Go check that out now, todayinmortgages.com/marketing. All right, Rich. So we like to rate every article that we read, and our scale again is 0, tear down, 1, take it down to the studs, 2, fixer upper, 3, builder grade, 4, move-in ready, or 5, perfect listing. Rich, where are you at on this?
I'm 5 is perfect. It's factual. It's what's happening
today. This is all
today.
Facts. It's the facts you guys should be knowing about. This is another tool in your belt that you should be going out there and using, because it is hard right now to sell, and any savings that you can bring back to the customer, bring back to your buyer. You need to be talking about this. All right. Thank you so much for being on with us today. We hope we made Today in Mortgage Land make a little bit more sense. And if you like what we're doing, subscribe wherever you're listening or watching this. And if you're on YouTube, hit that like button, leave us a thought or comment on today's article. If you enjoyed hearing Rich's expert advice on today's show, click that grow link in the description below to see how you can join the best network in mortgages and get daily coaching messages from him and other experts and get the best support in the industry. Thanks so much for watching, guys. Rich, you got any final thoughts?
Get after it. Go educate your referral partners.
That's right. There's stuff to be won out there, so go win. Hey, thanks so much again for watching, you guys. Take it easy. We'll see you next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and/or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.